Well, good evening, all. Ira Epstein with your SPDR-ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday. And we're sitting here now at the 30th of January, 2024, the end of a trading month tomorrow. Interesting time. Lots of earnings today. Microsoft, AMD, Starbucks. These are all off the top of my head. Stryker came out. There was just so many. And the initial reaction as a group, we're down a little bit. Now, the more you go into them, you get different stories, who's taking certain charges, is they're letting people go. And that's a story I was writing about also in tonight's futures market report, where I cover everything. All the companies letting amounts of people go. The biggest company I saw let anybody go was 20,000 people, but on average, they're 700, 1,000, something like that. Will those people get jobs? Well, if you looked at today's jolts, obviously, yeah, they're going to get jobs. Why? Because you got 9,000, you went back up in the amount of people or companies that are looking to hire people. So it's a very mixed bag right here. We see that some of the corporations taking numbers down. We're seeing GM get a pop to the upside, as you can see today. They did very well because they're ICE, and they've already eaten the money they have to from electric cars, and they've done their cutback. Lucid was up, Ford was up, but Rivian was down. As we step over here and we look at Tesla, up 66 cents, another gainer day for NVIDIA. And a very mixed bag in the stock market here. I would expect that we would be under a little pressure in QQQ. And the reason being, these are all the tech stocks that are reporting today. We have a whole week more. Remember, there were 100 and some odd just in the S&P 500 stocks reporting this week. So that's a lot. Now, tomorrow we have another full day of information. You got the Mortgage Bankers Association coming out at you at 6 in the morning. We have ADP private sector jobs coming out. I don't see Challenger Gray here, but I think they come out at about 6 in the morning, and I think it's tomorrow. U.S. fourth quarter employment cost index comes out at 7:30 a.m. The Chicago PMI number is going to come out at 8:45. And at 1 o'clock in the afternoon, well, we're going to get the Federal Reserve monetary policy statement. And then at 1:30, we get the press conference with Fed Chair Powell. So it's a full day. It's a full week. You're going to get worn out this week. We have the Bank of England yet to come. Then we're going to get, as you know, the jobs report and all the other ancillary reports in here. Plus, what's going on in Israel and Hamas. I mean, if you read the reports, Israel keeps saying no to everything. Hamas says they're getting closer. I appreciated that. The negotiators think a deal is around the corner. It's gone from a 4-month deal to a 3. Now it looks like it could be 6 weeks as to what it would be. The Biden administration is getting ready to attack in some manner Iran. We don't know what that manner will be, thank God. We heard today that the Biden administration is going to buy another 3 million barrels of fuel for the strategic reserve. They announced that today. So you got interesting day. As we look at Boeing today went to the government and said, listen, we're going to delay, I think it's a MAX 7 or something. They've got so many crazy numbers, I can't keep up with it. But another group of planes, new ones, for certification, they're going to push back to 2026. Now, you'll say that hurts them. They only have 392 planes in total for that order. So it doesn't. And they'll be able to move others upward for it. So it's jogging it around. It was still down on the day, another 2%. So this is a stock that has gone from roughly $270, and it's sitting here $70 lower. Any way you want to cut it, okay? It's lost a third of its value. And the question is, at what point does it start saying, okay, we've wiped that out. Now where does the value start coming in? In terms of chart action, you have lower highs, lower lows. You're bearish. The market is underneath all key moving averages, and in a horse race, the 18-day average of closes is running to get down to the 214 through 13 area to join the 100 and the 200-day moving average of closes. That'll be formidable resistance in the market. But it'll also be an area that if it can clear it over time and get all those average under it, the market turns bullish again as a technician, but not the first go. The first go is bearish action into that when and if it happens. And if we take a look, the stochastics are still just laying here. Are they staying embedded? Well, you can see. The answer is we need one more day, and they are. They're fully embedded. You got your 3 days in a row. So until you get the red line over 21, the market stays with the pros selling into the market on rallies. When that happens, the short covering, in my opinion, will begin. And that's when you start coming back up to challenge those numbers. At least that's what I would assume the game plan is going to be. When we go to the uranium, CCJ, it fell back to the 18-day average, and now for 3 days, it's been fighting at that. It's void of a trend. It's got a higher high and lower low. The next chart we have is UGA, and this is the gasoline fund. I thought it got ahead of itself in hitting the Bollinger Band and pushing on it, but it is embedded. Now, here's the dilemma for chartists. The first challenge of a 100-day average, when you haven't been there and you're suddenly over it, often, I cannot say the word always, but often is false. And the market comes up there, it lures a group of traders in, and then the market knocks it down. It's just something I've noticed over my career watching charts, and I watch them every day and have for generations, well, not generations, decades. 5 of them, about. So I wouldn't be surprised that you pull back. But right now, you're bullish. So the pros are buying at the 100-day. They'll flip-flop if the red line closes under 79, looking for an immediate test down there. In XLF, you're at the upper Bollinger Band, fighting along it. That is bullish, not bearish. Traders always tell me, oh, look at it, it's ahead of itself, it's in trouble. It's not ahead of itself. It's forcing the stochastics to embed. This is even more bullish action than I thought it was going to get. I don't know where it'll stop. I tell traders not to buy Bollinger Bands or above them. I'll stick with what I teach. Then we get to the industrial sector where it too, now you're in the first thralls of being overbought, but you are putting both numbers over the 80 level. So if they stay over 80, they start embedding. That means you pull this, and if you can embed, you add another layer. Is this going to be just a sideways action that fails here or pulls back? What the pros will do is nothing right here. I think they'll let the game develop and then from there make the decision. In AMC, as you know, I think we're stuck in that $4 range for the time being. You have a bearish embedded reading. When it loses it, probably gets up to challenge the 18-day average, but right now still very bearish. In the consumer discretionary, right on up to the upper band, look at how sideways you're going here. The consumer doesn't stop spending. He keeps spending, he keeps buying, and the economy keeps going forward because of that. As we go to the home builders, you have no trend as I see it. Higher high, lower and low. Some of them are reporting. They get earnings that are sort of going like that right now. And you can almost see this in what the index is doing itself. When we come to the energy sector, it's up in a pop to the upside. The U.S. is threatening Venezuela, but the Biden administration, as you know, is very timid. So now they're talking, maybe they don't shut off all of the oil come April if Maduro doesn't go along with the reforms that he had signed on to do for elections that are to be held in the second part of the year. Right now what's happening is the people running against him can't get a platform because he controls the government and he's shutting them down. So the U.S., according to the Biden administration I'm reading about, might shut down some exports of oil, some exports of gold and other things. All right. They've gotten up to the point where they're taking in about $700 million a year in oil exports. They could cut a third of that off of them. Again, I don't know what the Biden administration's game plan is on world events at all. I can't figure it out, nor energy events. In GLD, you have a market that's just drifting back and forth in the tight action. You did get up to the upper Bollinger Band today, and you stopped right at it. So this is your problem of the market getting to resistance and stalling. Why up? Because everybody's waiting to see when and if and what does the Biden administration do. They may well hold off till they know if they have or don't have a deal between Hamas and Israel. They may not want to shake up the cart there. You know, there's no hurry here. The damage has been done. When you're going to attack, you can attack. Do they have to go tit for tat? Absolutely. Do they have to slap hard? Well, I don't know about Biden. Any other president would slap real hard. Higher lows, higher highs. You know that I just don't think this administration goes out there and does the force that I think we should be doing to stop people. And that's what people in the world understand as force. As you can see, you're fighting the battle between the 200-day average, the 100, and the upper Bollinger Band. Again, sideways action, but silver is a little bit stronger than gold on a technical basis. The copper market got stuck as we thought it would. Right here, I kept saying, do not buy that first test of the 200-day average, the way you just heard me talk about the 100, and the market has stopped there, short of going anywhere. The markets are looking for China to drop another shoe. I don't think they'll drop that shoe until we get towards March, when they have said all the way along they're going to release a bunch of reforms. They know they've got to take care of the property market. I read today more stories as to what they're trying to do. You've got to get the people's confidence back, and you didn't get it back when Evergrande is now got to go into liquidation and won't be able to deliver. Investors that bought on the pennies, the bonds, they're going to see that wiped out, at least in Hong Kong. And the more I read, I still don't understand. If Hong Kong makes a ruling, is that ruling impacted in mainland China? I don't see why not. The court system's the court system. In BND, you can see how you're climbing up here. Now, the higher this climbs right now, is it betting? And that's the question. This in TLT, that with tomorrow's Fed statement, we see a shift. And the shift the market is looking for is, does the Fed drop the phrase, risks to the upside? That's going to be what I look for. If that is dropped, it tells you that they are now in that room talking about when do we cut, boys, rather than keeping that there. Do I know that? No. Do I read about that? Absolutely. And that seems to be what the guys that are much smarter than me are saying. When we take a look at the UUP, be this, be FXE, trying to second guess all this going into tomorrow's FOMC meeting, do yourself a favor. Don't. Let the meeting come out, see what it's going to offer. We're going to be writing about it, doing an awful lot. It'll be all afternoon writing reports on this from our staff at Linn. If you haven't seen our research, how do you get it? Just go to iraepstein.com. When you get onto the page, free offers. Pretty simple. I'm Ira. You have yourself a good day. I'll catch up with everybody tomorrow. Take care.